with some of the most creativity, ingenuity, and entrepreneurial spirit that you can find in America is going to be in the Black community. Unfortunately, that having been said, the Black community, statistically at the time of this video, is the most denied group for business lending in the country. And that leads to some of the lowest rates of business ownership in the country by demographic. In this video, I want to go over 4 major sticking points that's holding back Black America from getting approved for the business lending that they need to capitalize their businesses and launch their ideas into the vision that they see for themselves. I want to give you those 4 pillars as a business banker, 15 years in banking and financial services. But more importantly, I also want to give you context on how you can solve this problem, or at least start to lay the foundation to get over this hurdle. That is, if you are a brand new startup, if you had a business that's been on the shelf for several years, a business that's off the ground, but not quite to the point where you feel comfortable where it's generating consistent revenue, or if you have a completely successful business, but you're still lagging behind in your ability to get approved. I'm going to give solutions for each one of these levels. So I want you to stay tuned all the way to the end, because my goal in this video is to specifically target the demographic that I can relate to the most, not only as a Black business banker, but as a Black entrepreneur as well. So I want to give this context from a healthier lens. This is not to kick up and dig up old bones or touch on too many sore spots, but I do want to address the elephant in the room when it comes to lending and small business lending in Black America. And I want to give solutions by the end of this video. So please stay tuned to the end. For those of you who are new, I'm JP, the Wealth Gap Disruptor. This channel is dedicated after my book that covers the exact topic that I'm going to be covering in this video about how to bridge the gap between banks, capital, and credit. So for those of you who are new, welcome to the invitation. Now, for many of us that are in the room, if you happen to be a viewer that happens to be a Black business owner or a family member or friend of Black business owners, then you likely can relate that it's been extremely difficult to get a fair shot at lending in the banking system when it comes to capitalizing your business. There's 4 major pillars holding that back. To be fair, before I get into them, it is completely well understood the historical context around economic participation as a whole for Black America in our history in this country in America. I am not anti-American. I don't hate the country, but I damn sure understand the history of it, and I want to be completely fair to that. So to put this in context, everything I'm about to cover is not to omit or erase everything that has gone on or not been allowed or has been taken from, etc. This is to put context in 2026 at the time of this recording. What the problem is from an underwriting lens, a banker perspective, and how we can take actionable steps to solve the problems, okay? So banks have their end of the spectrum. As Black business owners, you have your end of the spectrum. Both sides need to come to the table to solve this problem. I just happen to be addressing Black America, Black entrepreneurs in this video. Now, what's number 1 of the 4 major components that is completely disrupting Black America's ability to get access to capital? We are the most unbanked or underbanked people in the country. And that is a very, very dangerous statistic. We basically have very limited to no access to quality financial institutions and resources at scale. Statistics show somewhere between upper 20 to 40+% of us either are unbanked or underbanked. For those of you who are unfamiliar with those terms, unbanked means that there's no healthy functioning banking relationship at all. Underbanked means that there's not enough full-scale access to quality financial institutions. So all of your financial needs and financial service needs are usually being addressed by very expensive and oftentimes predatory financial institutions and alternative institutions. This is a problem for a myriad of reasons. That's probably a video on its own, but a couple of highlights that lead back to why this gets us denied for capital when we go out as business owners is because we don't have the banking and financial history to qualify for most underwriting. We also end up by proxy not having the financial literacy necessary because we haven't interacted in the financial system at scale to understand the various terms and strategies and tactics and tools available to optimize our money. And so this leads to a scenario by the time we go to a financial institution to apply for capital, they can't find enough information on us. And what we may have set up is probably not set up properly. And so this leads to a ton of gaps in our applications when we go to apply for business funding. That's the number 1 problem that I want to address in the room. We are unbanked or underbanked. We don't have enough healthy strategic and intentional banking relationships set up where we can optimize our money and paint the picture on our applications that we're low risk, responsible borrowers who are ready to take on capital. So that's number one. If we go down beneath that point in time, the next one, number two, is going to be we have the worst average or median FICO scores in the country at the time of this recording. Somewhere in the 620s and 620s to 630s in the data that I've seen in recent times. This is also a huge problem. No matter how much business credit content hits the internet, when you go for mainstream funding, when we're talking about SBA loans, we're talking about lines of credit and term loans, a lot of these different lending products, even business credit cards, all require reasonable personal credit. Most of them, if you're not a long-standing 7 to 8 figure earning business, will require a personal guarantor if it's not some alternative fintech, right? So what that basically means is we're unbanked or underbanked. And on top of that, that also leads into we have some of the worst FICO scores. And that's not always because we're irresponsible. There's a myriad of reasons why that's the case for a lot of us. Some of us, before we even 18, we have negative items on our credit report. A lot of you, I'm sure, can relate to that. But at the end of the day, this is another major hurdle or issue or obstacle in the way of accessing capital. Your personal credit will be assessed the vast majority of times when applying for small business loans for your business. And having some of the most median FICO scores means that the vast majority of us in the Black community don't have the FICO scores necessary to qualify for funding. The third of the bunch is going to be we don't have the proper financial literacy or financial documentation preparation in place. What that basically means is financial literacy wise, we're completely unaware or in a respectful sense, ignorant to how to structure our bank accounts and our finances and our business finances. On top of that, we also tend not to have the documentation by proxy in place to present when it's time for business lending decisions, which is why so many of us tend to be so attracted to no-doc programs because a lot of us don't have documentation. And I understand why this seems like such a great fix and it's such a desirable topic and it gets so much attention. But to be completely fair, most no-doc programs are the short-term temporary forms of financing that can only get you off the ground at best. And they tend to be the most costly over time, depending on the terms and how long you use them for and how you use them. Full documentation programs are the most arduous, but they're the most rewarding. You get the best rates and terms from the most stable and reliable lenders in the marketplace, in the financial space. Full documentation is where you want to be ultimately. Some of us are going to have to start out at the no-doc range, and I'm here to support that. But I want to be clear as a business banker, it does not work long-term sustainable for your business. You have to get the financial literacy and your financial acumen to a point where you can organize your financial picture in physical form and provide it to a lender or an underwriter and position yourself for approvals. We just don't have that together. Some of the previous reasons that I just laid out contribute to this problem as well. Number 4 is going to be we have next to no healthy relationships with financial professionals. This one hits home the most because the majority of my content is rooted in relationship banking. So that means the vast majority of us, and I can attest to this as a business banker that works with dozens of business owners on a yearly basis, sometimes hundreds on a yearly basis, and I've been doing so for years. Many of us struggle with developing or even knowing that we need access to financial professionals to support us on our journey. This contributes to not having documentation together, not positioning your cash flow effectively so you look presentable to lenders and underwriters. We don't have healthy relationships. I understand the historical context as to why we're skittish, why we're leery, but at the end of the day, at this point in this modern era, it's crushing us. And so I want to be the first to say that this one, number 4, can actually be the most important out of the bunch because the rest of the 3 can be solved through number 4. Healthy relationships with a banker, healthy relationships with an accountant or tax professional, healthy relationships with somebody who can help with the legal side of things, healthy relationships with somebody with an insurance background that can help protect your business and your assets. All of these things are ecosystem or symbiotic. One of my colleagues that I work with on a regular basis is a senior a business consultant for a mainstream financial institution. We work together all the time in the community, educating and providing resources around this topic. He likes to call it BAIL. It's basically your ecosystem, acronym for the ecosystem every single business owner should have. You should have a banker, an attorney, an insurance person, and a lender. At the end of the day, you need to have these things in place. You need to have these relationships in place. This is where other groups excel. They're not geniuses with their finances. I work with all backgrounds all the time. And there's nothing overly special per se about any other group of people that tend to do well with banks and well with accessing capital for their business. The number one common trait that they have in play that works for them, other than historical context, is relationships with financial professionals, healthy ones. I'm talking about the kind of relationships that get to the point where they're personally interacting, events together, their family get-togethers, or whatever the case may be. I personally go to my business clients' events when they have them. Literally, some of my clients have marketing events, they have events for their business, whatever the case may be. I personally attend my business clients' events and support them hands-on. I go patronize their businesses, within compliance means, of course. So my point in saying all of this, before I get onto the solutions and the things you could be doing, those four things, those four pillars are absolutely crushing the Black community when it comes to business ownership. Business ownership could be one of the biggest single metrics that can improve the entire Black community. Business ownership leads to job creation. If it's done in the community, it can lead to property value increases. It improves the tax revenues in the county, which can lead to better schools and infrastructure. When I tell you business ownership can unlock and change and improve so much in any given community. And when you see successful, well-knit communities, more times than not, you see a ton of small business owners in that community. I see it in other ethnicities, communities all the time in my city. I'm sure you can attest to the same in your own. When you see healthy communities, stable communities, safe communities, high property values, great school ratings, almost always you will also see a ton of local in the community small businesses. It's a symbiotic relationship with economic and socioeconomic status, infrastructure, education. It all ties back in together. Political influence. So before I ramble any further, because this is a passionate topic for me, those of you who stuck it out this far, we need to talk about how to start taking steps as an individual or a collective of business owners based on where your business may be, okay? If you are a brand new business or a business that has no revenue, maybe you've been sitting on the shelf, you are likely somebody who has no experience navigating developing relationships with banks and financial professionals, etc. Where I would recommend you to start to get yourself positioned to get the relationships you need, to get the proper eyes on your financials and help your business get structured and get the foundation that it needs. What I would recommend for you is every single mainstream FDIC insured financial institution is under the Community Reinvestment Act. This is legislation that was passed in the last 10 to 15 years or so that is dedicated to making sure that the financial institutions in a given community have products, resources, and services available to people in that demographic. It forces to make sure that they're doing so much lending, banking, and free educational tools and resources to support that community. If you are a Black business owner and within the grasp or reach of your community, there's a bank there on the corner, that bank has an obligation to provide resources to you and your people, literally through legislation. It's called the Community Reinvestment Act. Do your research. This is something that means they have to create products, services, underwriting in certain capacities, free education, free resources, workshops, events, etc. Consulting, they have coaching, they have to provide the resources necessary to support you. You go to that institution and immediately try to find out, hey, what do you guys have available to support me as a minority or a Black business owner? What do you have available under the Community Reinvestment Act to support me here? What events, resources, products, and services do you have available that I can take advantage of to help get my business off the ground? If you are a brand new startup or you had a business and you let it sit on the shelf and you don't have things going yet, this is a great place for you to start. If you have a business that's off the ground, generating a reasonable amount of revenue, but it's kind of muttering along, you haven't found that stride, or it's just not quite stable yet, you know you need that support, those additional resources, you can also take that exact same avenue that the first group I recommended take. But if you do have financials going and an existing banking activity going on, that means you're at a financial institution that's already got your relationship. You need to get a banker, a business banker, immediately. That business banker, when you find a good one, should be providing the tools, guidance, resources, and connections to support and insulate your business. The relationship is symbiotic between us. As your business grows and gets better and produces more revenue and qualifies for more funding, I get paid more as a banker. So I have a vested interest in seeing you grow. You need to get with a business banker where you're already banking. And if they're not providing the resources or the urgency around supporting you, once you declare that you need it, then immediately you need to move your banking relationship somewhere that's going to appreciate you. And I have clients that switch banking relationships all the time by the time they get to experience what I have to offer. Because what I'm providing this video, the passion, the insight is exactly what my clients get in the field. So they leave relationships with other banks all the time. Because even if I can't get them everything they need at the institution I'm at, I will help them go wherever to get it. And so I don't have to worry about losing them as a client because they're getting the product from over there. They're getting the relationship from here. So you need to find a business banker immediately. This will help cure all four of those pillars that I stated that are all obstacles, rather, that are in the way of you accessing capital. Because 9 out of 10 times, if we took a microscope, I guarantee you, if you've been getting denied by banks, you fall into one of those 4 buckets or multiple of the 4. Getting the relationship off the ground expedites your development, reconstruction, healing, or elevation immediately, because you're going from the trial and error phase of things to expert advice and guidance. That saves you months to years in accessing capital. If you have a successful business, which I've encountered this firsthand, successful business owners that have upper 5-6 figures in revenue, been in business for 5 or 10 or 15 years, and been banking at the institution for the same amount of time, and still can't access capital, credit problems, cash flow problems, documentation issues. You need to be getting with a business banker or a relationship manager immediately, and you need to be shopping institutions immediately. What I mean by that is you need to be piggybacking off of the first 2 recommendations that I made. But if your business is doing 6 figures a year or more in revenue, you are getting in the realm of solid business banker to relationship manager territory, meaning that you can get tailored expert advice from a high-ranking business professional. This is going to change the game, because a lot of relationship managers, business bankers, we spend all day prospecting, trying to find people like you that need us, that have the business, that have all of the intangibles and the tools. You just don't know how to put it all together. You need to be getting to your institution and let them know, hey, I need a relationship manager or a established business banker ASAP. I've been in business this long. I generate this much revenue. I run this much through this bank. And I have not heard from a business banker. I've not gotten any guidance, and I can't get access to any capital. It's unacceptable if you have an established business that is years old, solid revenues, and you don't have the support and guidance that you need to access capital from a particular bank. Unacceptable. Because likely you're only a couple steps away or a couple of things tightened up away from getting an approval that can completely skyrocket your business. So that's my recommendation for each and every one of you. It's not, and for some of you, it may not be the whole quick hack strategy tactic thing that you may have been looking for. I am not a sensationalized channel. That is not, I am a legitimate business banker that's really in the field doing these things legitimately. So you're going to only get guidance and advice and recommendations that are fully legitimate, actionable, useful, and compliant. So for those of you who appreciated this content and made it this far, first off, if you have any questions, comment them down below. Let me know if you fall in any one of those 4 buckets or have any one of those 4 struggles. Which one, or what, if you have multiple, which ones are hurting you the most? Let me know where you're banking at and where your business is at the time. Comment down below. Let me know questions you have from this video. But also, I want you to comment down below and focus on one single word. And that's going to be reconnection. Comment reconnection down below, because what that basically means is that you are looking to reconnect with the economy and the financial system with your business and stop sitting on the sidelines, because this always boils down to the disconnect between banks in our community? I want you to comment reconnect down below, because that's going to let me know you stayed all the way through the end of the video. It also lets me know that you understand what I mean when I say the invitation, because these financial institutions are well aware that we're a drastically untapped market as Black entrepreneurs in the Black community. We are one of the most industrial group of people that has all this economic activity going on that banks don't have a lot of coherent access to. And they understand that, and they're pouring a lot of resources into trying to mend that relationship and pull that gap together. So I want you to put reconnect in the comment section down below. Let me know that you understand this is the opportunity that has been fought for decades prior. The opportunity to get in and hold these institutions accountable for providing the tools, support, and resources to help you grow your business and rebuild your community. This is the opportunity. So comment reconnection down below. Other than that, to all my new viewers, welcome in. Welcome to the invitation. To all my returning viewers, I appreciate every single one of you. Like, comment, share, subscribe, support the video, support the channel so the channel can continue to support you. Get in the description section down below. There'll be more details about me. Get in the about section and learn more about me and my professional background. Also, there's a link down below for you to get my book, The Invitation, that again covers the exact topics and much more that was covered in this video, bridging banks, credit, and capital together to help us engage in the financial system and the economic system on an even playing field and build the life and the community that we all envision for ourselves. So get in the description section down below, check out my book, as well as the tools that I have down below in the description section. Other than that, I appreciate every single one of you. I want each and every one of you to stay focused, stay in motion, and I'll see y'all soon.